All right, guys and gals, it's about that time of day again here, folks. Time to get back to work. Close out the email. Get out of those chat rooms. Let's get focused here and ready for tomorrow. It's Tuesday evening. It is February the 4th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best trade setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is extremely important because we're going to find the best levels of support and resistance in tonight's videos, the best entry setups and exit targets in tonight's video, and most importantly, we'll identify and hopefully avoid all the common rookie mistakes and common traps waiting for us tomorrow. That's Wednesday's trading session. And we have a full video newsletter in store for you guys and gals tonight. Well, of course, with the charts all prepped up in the background, we get some oil, some S&P, some Nasdaq, and some gold. Got a lot to talk about. Nasdaq blasting to new all-time highs. Can the S&P follow suit? How about that oil? The oil just keeps on running lower. We're going to grab all that stuff. We'll break it down on the charts here for you guys and gals tonight. And then don't forget, tomorrow's a big day. It's not just hump day. It's not just hump day. We get a ton of news, right? That's scheduled and unscheduled news we're watching for tomorrow. So we'll grab the calendar as well. So charts are ready. Calendar is schedule's ready. You're ready. I'm ready. Before we jump into the video tonight, though, I want to make sure to remind you, if you're here for the first time right now, you got to subscribe to our YouTube channel. I don't want you to miss tomorrow night's newsletter. Hit that bell icon, by the way, when you subscribe. So make sure you subscribe to the channel today. That way you never miss another great newsletter video. And don't forget, if you have any questions, drop those questions in the comment section below. I'll be hanging out there after we publish the video tonight to make sure we get all the questions answered. And as always, if you're part of the newsletter team here at School of Trade, if you tune in every evening to watch this video newsletter, right, hit that thumbs up button for me. It means the world to me that you spend an hour and 15 minutes with me every evening on this video newsletter. So hit that thumbs up button for me if you love the video. Drop those questions in the comment section below and make sure you subscribe, right? Don't say I didn't warn you. I don't want you to miss every video we publish on this channel. But in the meantime, let's not waste any more time. Let's jump into these charts. First, though, let's grab the schedule and let's make sure we know what the schedule looks like for tomorrow. As we go into tomorrow's trading session, looking at the Econo Day economic news calendar. Tomorrow, of course, it's not just hump day. It's not just hump day. Wednesday morning, February the 5th. What do we have here on the schedule? We got a lot to talk about here on the schedule. First of all, we get some news tomorrow morning, right? We get the ADP employment number and the international trade number coming out at 8:30 Eastern time. That is going to be a big block of news coming out 8:15, 8:30. I will definitely be looking for setups 8:40, 8:45 into the top of the hour for the oil open at 9 o'clock. As we go later in the session, there's those, right? There's those 3 magic letters, ISM. We talked about the power of ISM before. We've got more coming our way tomorrow at 10 o'clock Eastern time. That is going to be a big, big time of the morning tomorrow. And then, of course, we better make our money on oil early tomorrow morning because we have that inventory report at 10:30 Eastern time. Remember, everyone's got a different opinion about this. I really don't like oil after about 10:15 on Wednesday mornings. So for me, once I get about, 10:10, 10:15, and the markets start to slow down ahead of that inventory report for oil, I'm going to sit on hands and I'll focus on S&P, Nasdaq, gold, other markets that are a lot more reliable. Now, some people like to trade the news. I'm not a big fan of trading the news. Personally, I've never seen very much consistency and reliability in news-based setups. If you do trade the news, be very, very careful. My personal opinion is there are so many times every day you could be trading without having to worry about that risky news trading strategy. So I skip it, right? I focus on only the most reliable, dependable, and proven setups that we use every morning in our trade room. So we know there is some big news on the schedule tomorrow, starting off bright and early. 8:15, 8:30, 10 o'clock, the ISM. And then again, if you're on oil, right, if you like trading oil like I do, get out of those trades early, a little bit earlier than normal, right? So 10:15, we're going to cut it off on oil. Now, speaking of oil, we talked about this last night, right? Today, the OPEC plus, right? The OPEC countries plus a couple additional, I won't go into more detail than necessary, but OPEC starts their 2-day meeting today. Tomorrow, we're probably going to hear some sort of announcement tomorrow. Usually it's sometime around 7:30 a.m. Eastern time. It's a lot like the ECB announcement, right? It's just as we go into lunch in Europe, right? So once we get about 7:15, 7:30, I will definitely be watching closely on the news feeds to hear what OPEC says. Right now, crude oil looks dead on arrival. It looks DOA. That body's getting cold right now on oil. They can't get up off $50 a barrel. I would be surprised, let's put it this way, if they don't make some adjustment to cutting production tomorrow. The only thing that I could see that they may not cut production tomorrow, and of course, if they cut production tomorrow, we should see a bullish rally, and we'll talk about the plan for that on the charts later on in this video. The only thing that I can see right now, because usually once oil gets down around 55, 50, we magically hear about some production cut from OPEC and the price, starts to make its way back up to $60 a barrel, right? There's this big range going on right now on crude oil between 50 and 60, right? You can see it on a bigger picture time frame. Anyways, bottom line is the only thing I can see why they wouldn't call the production cut tomorrow morning, which again is a very bullish, right, boon for the price of oil, would be if they really think this coronavirus is worse than what they're seeing. If they think, right, because remember, they can only cut production so many times, right, before it starts losing its value, right? It's a lot like the Fed and rates. They can't just keep cutting rates every time, right, the market goes down. Eventually the market will absorb that and it won't be, right? There's a law of diminishing returns to it. So I'll bet, I can't imagine anybody who's not expecting them. They said today they weren't talking about it today, but I'll be surprised if we don't see some sort of production cut for tomorrow. But again, this is very much a guesstimate. It's very much an educated guess. I do wonder, though, Are they thinking if this coronavirus keeps getting worse, they wait to make the announcement in an emergency meeting, maybe at 45 a barrel, right? We're at $50 a barrel right now. Maybe it keeps going down to 45 and then they hit us with a production cut. They've talked about this emergency meeting early in the month of March, and who knows, right? So they definitely left the door open to kind of delay the production cut, but that is something we have to be watching. If you're an oil trader tomorrow, it's definitely something we're watching right as we come into the opening bell tomorrow, right, into oil. Now, again, don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to be in our trade room tomorrow. We'll have a front row seat to kind of trade the reaction to that OPEC announcement. And again, the OPEC announcement may be nothing changes, right? So we don't really know what they're going to do. Oil has been, you'll see in a second, oil has been, again, it's been dead weight. It's been a cinder block the last 24 hours for the most part, even with the rumors about this production cut. So very bearish on oil. We'll see if OPEC can pull a rabbit out of their hat tomorrow morning and get a short covering rally. If not, they may hold on to that card until they really need it, right? If it keeps going lower, right? 45 would be a good target for those bulls to come back in later on in the process. But anyways, most important thing for tomorrow, OPEC announcement before we open up at 8 o'clock Eastern time, 8:15 and 8:30, big news block, more big news at 10 o'clock, and again, careful on oil later in the session tomorrow. We do have that State of the Union address tonight, right, from President Trump here in the U.S. I don't anticipate that to have much of an impact for tomorrow. We'll obviously see, but I don't expect that State of the Union address tonight to be that big of a market-moving event. So tomorrow morning, make sure you're there with me, 8 o'clock Eastern time, right? And we'll make sure we trade that OPEC announcement together. Speaking of which, let's jump into some charts here now. Now that we know more about the schedule for tomorrow, we know what to look for. Let's grab a look now at some of these charts. Got some crude, got some S&P, some Nasdaq, and some gold. Relatively simple analysis tonight. Let's break it down first with the crude oil. Boy, 24 hours go by, and we find ourselves pretty much right back where we finished, right, yesterday's trading session. We were just right here, right, sitting at these lows, right, this time last night. What do we know about oil right now? We know we're bearish, right? We know in a bear market, we want to sell at resistance. We also know that anytime we see a strong move in one direction, we're probably going to get a retest of that low, right? We also know that strong move down, they went up and came all the way back down to it. So we definitely know we're bearish, but I'm a little bit uneasy trying to be a seller right here because we're sitting right at the low from earlier. And most importantly, we got that strong move down. They pulled back and they whacked it again, right? So they got what they came for. At this point, the bears should be fat and happy, right? They got a chance to sell nice and high off a nice deep pullback. They get it back to retest the low, right? That's where a lot of bears will be likely placing their targets for today. And then on top of that, strong move down. The bears got one last little cherry on top, right, for a retest of that low. At this point now, we have to assume it's timeout time, and let's wait and see what we get from here, because we know we're bearish. We know we want to be a seller. I don't need to tell you that, right? You can easily see we're bearish right now. My biggest question is going to be, do we continue going lower here, right, down to another measured leg, right? Does this market keep bleeding lower? And again, even in the face of this potential OPEC production cut for tomorrow morning, still sitting on these lows, which in my experience is pretty unheard of, right? The fact that we're even whispering about a production cut is usually a very good sign of a bull reversal off these lows. So do we keep going lower down to that measured move, right? 48.62, or is this kind of a timeout spot here for the bears? Do we start going sideways down here, right? Nobody dares to buy it until they hear from OPEC, but nobody wants to get out until they hear from OPEC. So we start going sideways down here. That is a very likely scenario, especially with the OPEC announcement coming here in about 12, 18 hours. We also know there's potential here, like we saw early this morning, we get that big rally up and then back down again, right? We might get that pop, right, and then come back down from there as we go. So we'll definitely want to be ready for all three of these scenarios. We know we're bearish, so I definitely want to try to find levels of resistance. You'll notice here, I'm just get rid of these arrows here for a second. You know where those arrows are, and of course the charts are available below the video tonight on the trading blog. Finding levels of resistance. I'm going to mark up these lows. I'm going to mark up these highs. That makes a great, easy, what I call a hidden channel high, right? Love to sell off of that high. I can also see down, up, down. That's called a reversal line. That area is a great spot to be a seller as well. So there are two areas of resistance right up around that 50-20 area. That is something I'm definitely watching for. I'll also keep an eye on a range. If the market does turn sideways into a range, keep in mind we will use that range to really kind of calculate where our sell zone will be up overhead. Now, we don't know exactly where that range is yet, but it's certainly on our radar, especially with that OPEC announcement coming right down the line here. So if we go lower, right, we'll have to wait for opportunities to sell at resistance. We'll talk about that in a moment as well. So now we know where we have our key levels of resistance. Let's talk about different options here right now. What I'd love to do is get these bears to take some profit, get these buyers to come in and try to buy the pullback. Right, they held it right here. Remember from earlier this morning, right? Good example, right? They got their profit taking, but the buyers held the pullback, right? The buyers able to hold that pullback and reverse the trend into a bull market, mark the high, mark the low, right? And you're buying off the low of that channel, right? So that's what happened this morning. Will those sellers, will they let us get up off of this low, right? Get up off that low, profit taking for the sellers, buyers coming over, trying to buy that pullback, and hopefully I can use a failure pattern to sell right back down again inside that sell zone, right? I've got my reversal line, the top of that channel. I'm just hoping we get some profit taking here, get those buyers to come over and give it a swing so I can sell right into those stop losses, right? So a failure pattern off the high of that trading range. Now, don't forget, like we said earlier, right, if those buyers can hold that pullback on, right, if they can hold that pullback on strength, and again, this is kind of what you'd expect if OPEC sniffles at a production cut. We probably will get that reversal. If we do get that 1, 2, 3 reversal, now I'm going to mark up that high, mark up that low, and wait to buy the low right, of that hidden channel. Target going to be all the way back up to retest those highs. So hopefully at this point you can see this really, it's a pretty simple strategy, right? We're looking to get up off the low, see those buyers try and fail, and again, what you want to do is wait for the pullback to the moving average. Once those buyers come in off the moving average, they fail, right, we'll sell right into those stop losses. If they don't fail and they hold it and run, well, now we know it's a bull market. We can mark up the channel. We can buy the low of that channel. Again, we saw a great example of that right in the early part of this morning's trading session. The other thing I want to keep an eye on here is this range. And the hard part right now is we really don't know very much about the range. If we do get the range here in the overnight, what I'll do is I'll take the size of that range and I'll use it to calculate my sell zone overhead. And you'll see some examples of this as we go throughout the video tonight. Once I get that range, now it's just a matter of getting above the range, right? Getting above the range, and again, letting the buyers try to buy it and selling it right back down in. So imagine now, right, we go into a range here. Eventually, the sellers will give up, right? Eventually in a range, the sellers will run out of bullets, so to speak. They'll give up and the market will pop higher. When the market pops higher, that's our chance, right? That's our shot now to catch those buyers, which again, if they hold it, becomes a reversal. But if they fail, right, we're going to simply look for a spot to sell right into those stop losses and short that sucker right back down to retest those lows. We also might, if we go sideways here as well, keep in mind, if we do go sideways inside of a range, I can always look to pick bottoms as long as I've got a range at a major support level, right? We're at a major support. So if I have this range form, I can look to pick a bottom on this, but I want to use that nested failure, right? Remember that one? We talked about that a lot last night on the newsletter, right? Instead of looking for a buyer failure, we now look for a seller failure. And we use that nested failure to buy it right back up again. Now, what if we keep going lower? Right? If we keep going lower here, we know where they're trying to go. They're trying to get that third, right? That third measured leg down, right? 1, 2, and 3. So if we do end up running lower here, what would be a good setup to look for? I first want to make sure we get a strong move down. Then look for that 2-try trap pattern. 1 try for the bulls, 2 try for the bulls. And remember, we talked about this last night. Usually this trap will go just a little bit above that moving average, right? And if we really get lucky, we can put a little hidden channel on here, right? See, usually it all lines up really nicely there. So as we go lower, let me get that off here real quick. As we go lower, strong move down, right? First pullback, or buyers coming in once, right? Lower low. Quick little trap high on this, and again, this will usually be just above the moving average, right? If that's a good distance above the moving average, it's not going to be a very reliable setup, right? It's called a 2-try trap pattern as we go lower. So let's recap here real quickly. How can I sell this market? One way to sell it is look for the profit taking up around the high of that channel, look for these buyers to come in, try to buy the pullback, and just simply look, right, where would their stops be, right? Where would those buyers have their stops? And we're going to sell right into those stops, right? That's one way to look for it. The other way to do it is, again, if we go sideways here, not a lot changes. We still want to get up above the range. Same idea, right? Wait for those buyers, try to come in and buy the pullback, and we'll sell right into those stops. Again, not a lot's different there. It's just a trading range. That trading range will tell me, the size of that range will tell me where that key level of resistance is at that point. Or we run lower, we see profit taking from the bears. We see buyers come in trying to reverse it. Again, just above the EMA, right? And hit it, right? Nice big 2-try or nice aggressive 2-try trap going lower. Measured move is my target. How do I buy this market right now? What's a buy setup looking like? I definitely want to be ready for a possible buy because, again, OPEC could come out and set this market on fire tomorrow. We're going to wait and see what we get. We can't make a prediction right now, right? Do not try to predict that bounce. What we can do though is wait for that 1, 2, 3 reversal, and again, this will pull back to the moving average and they'll hold that pullback. That's how you know it's a reversal, right? Then we mark the high, mark the low, and this is where you've got to get aggressive on that. You don't get aggressive on calling the reversal. You get aggressive once the reversal happens. Once the gig is up and momentum shifts, then you've got to hit it, right? You can't delay on that. There's really one rule about reversals, and that is once they happen, you got to be willing to get in aggressively, because when those bears realize they're wrong, okay, when they realize they're wrong, they're going to get out, and a lot of times the market will fly right back up to retest that high. Speaking of which, right, if we hear from OPEC overnight and this thing tears, if it runs higher here, right, you know what I mean, runs higher on this, now profit taking from the bulls, higher high, quick little trap low, 2-try trap. That will be ideal, right? A 2-try trap pattern. If it really runs 1, 2, right? That'll be your aggressive 2-try, right? Your 2-try there. Bears try once, bears try twice. We're buying right into those stops. What I would do though is get that big run higher, shallow pullback, higher high, trap low. Those are the trades. Again, they'll be just below the moving average. There'll oftentimes be some sort of hidden channel on it. You know what I'm saying? Right? You get that, hit it. Hit it hard. As long as it runs, right? As long as you've got that nice strong run, the gig is up. Right? The gig is up. We know where they're going. And again, those are one of those trades where when you get that higher high on that 2-try trap pattern, right, you've got to get that trap and don't delay on it. Hit it, right? Hit it, right? Because if you don't, you're going to miss it, and it will jump right up, right, and run back to retest those highs. So lots of really great setups here we're waiting for here on oil right now. Oh, and don't forget, tomorrow morning, 8 o'clock Eastern time, we'll be there right there doing it with you guys in the trade room. If you're not going to join me tomorrow morning in the trade room, make sure you grab the trading course linked up in the upper right-hand corner. If you're not with me tomorrow, going over all the rules and doing it with me, the best thing you can do is grab the trading course in the upper right-hand corner, that free trading class for everyone watching the newsletter right now, that link in the upper right-hand corner. I'll also put all the links in the description of this YouTube video. So again, if you're not with me tomorrow, trading it with us in the trade room, the next best thing is grab that free course linked up in the upper right-hand corner. All the links are in the description of this YouTube video. We're looking great here. So now we got the oil all ready to go. Let's keep this party rolling. How about some S&P now? Over on the Emini. Now, obviously, we're bullish on the S&P. I don't think that's the easy part, right? Not as bullish as the Nasdaq right now, but we'll talk about that in a moment. On the S&P, strong bull trend. What does a bull trend tell me? Buy pullbacks to support. Now, there's really kind of two big clues here right now. The first clue is this spike in channel. Now, we talk about spike in channels a lot on this newsletter, don't we, right? What do spike in channel patterns tell us? They tell us deep pullbacks. Where? Into the base of that channel. Right? That's one very big clue. And again, spike in channels are really the top 5 patterns you have to learn as a new trader, because they're very common. They're not usually this big. They're not usually this dramatic, right? But we see a lot of spike in channels, and they are very common. They're very reliable. The key to a spike in channel, though, is anticipate a deep pullback. Now, deep pullbacks, we talked about that earlier this week, right? Deep pullbacks are great, but they come at a cost. What's the cost? Momentum. And momentum determines the type of pattern we're going to use, right? That's one big clue for tomorrow. And then, as always, right, anytime I see a market make this much of a move in one session, I always anticipate what? A trading range. In fact, that was the first thing we thought of this morning when we opened up the trade room at 8 o'clock Eastern time, right? And we saw this huge blast up, right, in the overnight. And I'm going, okay, look for a range, right? Anytime we see a big move that just won't stop, right, it's usually going to stall out, right, in some sort of range. Now, what does a range tell me? We just talked about this on oil. Once I know the size of my range, I can use that now to find my levels of support, right? Now, that gives me a great area for a relatively shallow pullback. Okay, so shallow pullbacks off the range, deep pullbacks off of the spike and channel, right? What else do we see here right now? Well, we definitely know we're sitting at what appears to be a major objective, right? Trending markets love to go to measured moves. We're also right around that big round number. So I think we can all tell we're bullish, but we probably don't want to make it a habit of buying up here around these highs. Probably not the best place to be buying. So really what it all comes down to is, do we poke higher? right? I mean, after all, the Nasdaq, right? If you look at the Nasdaq's back to all-time highs now, right? The S&P has some all-time highs. It's not going to be a walk in the park to get there. That's 37 handles higher, which for the S&P is it's a pretty busy day, right? You're going to probably want to take a bath after that one, right? That's a pretty busy day to go 35 handles higher. Could easily happen though. Could easily happen. We saw the Nasdaq, right, get that short squeeze today, so we know that it's possible for tomorrow. It seems unlikely, but we do want to be aware the market could run right higher here. They'll be exhausted at that time, right? But hey, it is possible. The other option is we might chop around sideways here as well, right? We get some employment numbers tomorrow morning, right? We may also get that shallow pullback, and we may also get that deep pullback, right? So those are 4 scenarios. And I know it's very basic, right? Up, down, and sideways. But that's, as a trader, you always want to go over those if-then statements, right? You always want to have a list of if-then. If this happens, then do that. If this happens, then do that, right? So, it can be very simple, right? What's our plan if we go higher? If we go higher here right now, I'm looking for 2 patterns, right? It's a 1, 2, 3 breakout. Mark the high, mark the low, and I'm buying off the low of that hidden channel, right? 1, 2, 3 breakout pattern. Or we see it rip, right? It just takes off to the upside, right? Heck with pulling back. It just runs at that point. Profit taking for the buyers, higher high, quick trap low, right? Remember, traps are really the gold there, right? It'll be just below the moving average, right? And again, if you're seeing this thing rip higher here, and then it pulls back and it's shallow higher high, that's the key. Right? That higher high is the giveaway. Now, you could get aggressive on this. You really could, right? If it rips higher here, right? If it really rips higher here, and 1 and 2, right? That is the same basic pattern, right? 1 and 2, but keep in mind, you're buying relatively high at that point. I always like to get that strong move up, shallow pullback, higher high, and then once I see that, then I know there are traps waiting here. Double bottoms are good, but trap is really what you want on that. And again, I call that a 2-try trap pattern. It'll usually be just below the moving average, right? And again, right, we'll find some hidden channel here. That's where the magic is. That's where the magic is on those 2-try trap patterns. Incorporate that channel, just below that moving average, and again, we know where our targets are going higher from there. So that's relatively easy. The hard part there is simply waiting for that breakout higher. If we do go sideways here, we don't want to trade up top here, right? If we go sideways up here, we don't want to do much up here, right? What do you do inside of a range? Nothing. Nothing at all. Whenever I sit in the middle of a range, what I do is I write in my journal, I update my checklist. I read my rules out loud. There are certain times of the session where you can have a chance to take a quick break from trading and look at your rules. Read your rules out loud. I encourage my clients anytime they find themselves when they're stuck in the mud somewhere, get up out of their chair, stand up, and actually read their rules out loud. It's something about when you read them out loud, you say them and you hear them. And of course, standing up out of your desk is what we call a pattern interrupt. It interrupts it and kind of resets you. What happens is when you sit at your computer all day long, you get kind of lazy, right? Your brain gets lazy, your body gets lazy. When you stand up, right? And again, if I was stuck inside of a range, that'd be a great time to stand up, right? Don't be afraid to say out those rules out loud, right? Talk them through. Then when we get back down to your desk again, right, you'll be razor sharp focused. You know what you're waiting for. Good use of time when you're sitting inside of a trading range. But what I'm looking for is eventually these buyers will run out of bullets up here, right? Eventually they'll run out of bullets. And again, we already know what the plan is if it breaks higher, right? But once they run out of bullets though, then we see the pullback. And once we get that pullback, what happens is the counter trend traders, they think we've given up now. And they think that we're going to be selling short now. And a lot of bears will come in and they will foolishly try to sell that pullback. Hopefully they keep doing it because it's such an easy setup, right? It's such an easy setup. When you have a range like this, we found a beautiful one this morning with our clients in the trade room. But the bottom line is when we sit inside of a range like that, just wait for the market to pull back. Eventually, the buyers will run out of bullets. Eventually, they'll pull back. Those inexperienced traders, right, trading fast time frames, trying to call tops and bottoms, they're going to be ill-prepared to resist that temptation. You got to remember, guys and gals, as an experienced trader, right, the easiest money you're going to make is when, unfortunately, this is the way it works sometimes, when inexperienced traders who are not prepared for the emotions that come along with it. They don't have if-then statements. They haven't gone through all these scenarios yet. That's your easy money right there, right? Your easy money is waiting for those impulsive traders to get caught and buying it right back up to retest that high again, right? That's a great option for us tomorrow. But as I mentioned earlier, right, we got that spike in channel. Spike in channels, I always want to think, okay, what if I get a really deep pullback, right? And it will look scary. It'll look really scary. Usually these pullbacks, these deep pullbacks are going to take on one of two forms. One is a two-legged pullback. What happens is you draw the trend line over, right? We want to get up and over and use that trend line now as a level of support. Again, I call it a two-legged pullback or a 2LP. Okay, that's very common for deep pullbacks. Another very common scenario is a strong, sharp move, right? Buyers run out of bullets, it pulls back sharply, and when it pulls back sharply, you know what's going to go on, right? The bears will try. But in this case, because that momentum, remember, deep pullbacks are great, but they come at a price, right? And the price is momentum. So when I see a real deep pullback, yes, it gives me the ability to risk small to earn large, but that comes at a price. There's a premium you've got to pay for that deep pullback. And what is it? It's momentum. Which is why in those situations, I'm not just going to look for that deep pullback and then try to buy right into those stop losses, right, like you would on a shallow pullback. Because a lot of times they'll come right in and they'll eat your lunch for you, right? They'll grab that trap and they'll sell it. So you don't want to get too aggressive on if it pulls back really deep. And again, anticipate that spike in channel. Let them try once, let them try twice. Once those bears are committed, now we know where their pain point is, right? Now we know where the injury is. Now we know where the pain starts. Now we know where those bears start bleeding money and we can buy right into those stops. Now, a heads up on this, a lot of times these what I call nested failure patterns, a lot of times they'll trigger, and because everybody's so caught off guard, right, it'll run back into the range here. Don't chase it as it goes higher. Wait for that two-try trap. Pull back, shallow, right? We've talked about this two-try trap pattern, right? When you see a market blast higher like that, but you know there's a range up there and we don't want to trade inside the range, look for that little trap pattern, right? And again, remember, oftentimes that will come just below, right? Just below that moving average, right? Just below moving average, trap low and hit it, right? Target is back up to retest those highs. So now we've got a pretty good plan here, right? For a range, for a break higher, right? For a shallow pullback, a deep pullback. Now, how do we sell this market right now? I know. It's probably not the most popular direction to choose right now, but hey, if-then statements. What would be a way to sell this market? Well, one way to do it would be to try to be a hero here and pick a top, right? And that would be we go up, we see a crown reversal. One try for the bulls, two try for the bulls. Trap high is an absolute must on this one because you are fighting not only the technicals, but you're fighting the emotions of the market. Everybody can smell the retest of the high right now. So, that's a good example, right? You can be right all you want, but sometimes timing is timing is all that matters, and timing right now might not be that best to be trying to short this market. But hey, if you want to try to grab a big short off the high, crown reversal pattern, right? Make sure it tries to make a run higher. Let those buyers try to buy it once, lower low and trap high. Remember, there's one place the buyers are not going to try, and that is right above that swing. It's your only shot. Right, it's your only shot, right? You don't want to try to sell down here because as it goes lower, buyers will come in again and try to buy it again, right? This is the hardest part about reversals is you can't be a wimp about it. If you're going to hit it, you got to hit it, and you got to do it high, right? Because if you try to sell this thing as it goes lower, what's going to happen is you're walking right into more buyers down here. You've got to be selling where the buyers don't want to sell, where they're not buying. And they're not buying off that trap, or they're not going to buy above that prior swing, at least not the big buyers that you've got to worry about on your short. Now, a much easier short here would be a strong move down, a pullback to the moving average, and a jump off the moving average. That would be a whole lot more reliable. Now, I know, you missed the big move down. I get it. But we're too bullish, right? Trying to predict that pullback holding is very, very difficult, right? There's no indicators or no special algorithm that can predict those things. Trust me, I've test driven millions, maybe not millions, right? But probably at least 1,000 different ways to predict reversals of my almost 15 years of doing this. And I always have a hard time reliably predicting a reversal. So instead, I'll wait for that deep pullback. I'm still going to look for that failure back to retest the high. But if those bears can hold it and make a good run, if they can hold, then great, good for them. We'll mark up that low, we'll mark up that high, we'll find that hidden channel. And again, like I mentioned earlier, when a market reverses, you've got to be patient on the reversal, and then you've got to get aggressive on that next pullback, because that might be your only shot to get in before it collapses back down to where? Back down to maybe not all the way to today's lows, right? But I'll tell you, it could. Easy come, easy go, right? Easy come, easy go. This area right down here, right? That area, lots of volume was traded there, right? What is that? 32.45, 32.50. That's an easy milestone. Again, it seems unrealistic tomorrow to go all the way back down, but look what we did today. So easy come, easy go. If it can rally like this, it can collapse right back down again. So now we know, patient on the reversal, but once you get it, you got to get aggressive, right? Or else you're not going to get it at all. Now into the plan here for the S&P. Now the Nasdaq is probably the inspiration for tomorrow, right, for the S&P 500. Now, over on the Nasdaq, let's take a look here on the NQ. The first thing we stand out right now is we know we're bullish, right? There's no doubt about that, right? Elon Musk and his crew at Tesla really gave a good boost to this Nasdaq today, right? So we know we're bullish, and we see the wedge. Now, I'll be honest, anytime I see a wedge on the chart, I always get a little bit of a bad taste in my mouth, because wedges are some of the most impulsive. They don't make much sense. You're going to see a lot of stuff that will happen in wedges where you go, what the heck are they thinking, right? And so, the bottom line is, when you see a wedge on a chart, and really all a wedge is, it's just a channel that doesn't pull back. That's all it is, right? And so think about that for a second. A channel that doesn't pull back. What does that tell you? It's extremely emotional. It's extremely impulsive, right? It's almost, dare I say, irrational, right? I don't want to say irrational, because the market is always right. I'm the one who's wrong, right? I can't argue with Mr. or Ms. Market, right? They're always right. The price is always right. It's the way the world works. So, but again, when I see this wedge, the first thing I think of is yuck, right? We're probably not going to get a lot of good, we're probably not going to get clean setups in and around that wedge. So what I do is I wait for the shock, what usually comes, right? So again, whenever I see a wedge, I'm always going, all right, I'm going to have to get really, it's a squirrely price action. It's very emotional. But a lot of times what happens though is when this wedge becomes really narrow, right? When there's not a lot of space inside that wedge, we typically get one of two scenarios. Either we jump through the wedge and kind of skip above it, right? Remember, where the wedge comes together is the target. Okay, so one scenario is, remember, wedges are impulsive, again, dare I say, irrational types of chart patterns. They always tell me, don't expect it's going to be impulsive, right? It's going to feel very jittery. So when I see that wedge, I know it's a possibility it may break through the highs, because nobody wants to trade inside the wedge, right? The other scenario is we get a sharp pullback, right? And that sharp pullback is where everybody is going to be waiting here to try to get in, because as you can see, we've barely been able to get anything underneath the moving average here today at all on the Nasdaq. So buyers are likely waiting here to try to find something to work with. There is potential for this to go sideways up here. The market made a huge move going higher. The only thing that kind of doesn't make sense to this though is if they do go sideways here is they haven't reached their measured move yet. You remember the S&P got the measured move. The S&P got what it kind of was going for. The Nasdaq is kind of in no man's land right now. Right? We're kind of up above all-time highs now. It's in a wedge. So I'm anticipating some weird price action as this market kind of tries to digest this stuff as we go into tomorrow. I think it all comes down to those 4 scenarios again, right? Do we go up, sideways, shallow pullback, deep pullback? I know it's very basic, but trading is very basic. We don't need to overcomplicate this. The one thing is stay out of the middle of this wedge, right? Stay out of the middle of that wedge. So first of all, if we do run higher, it's that 2-try trap, right? If we do run higher, obviously, it's that 2-try trap. Let me zoom in on this a little bit closer here. Get a little more friendly with this chart right now. All right, right. So let's say we go up higher here, right? Make a run higher here. Strong breakout, shallow pullback, higher high, trap high. Right? That would probably be your only real option as we're going higher. You wouldn't want to get too aggressive up here. You want to get that trap because you know where the measured move is. You know where that wedge target is. Now, if it does get that break higher up, I would anticipate eventually this thing will start going into a range. And once it goes into a range, we'll know more obviously tomorrow to find that buy zone, and we'll look for that pull back, right? Once those buyers run out of bullets, so to speak, they'll pull back. We'll look for those bears to come in and foolishly try to call that top, and we'll look to buy right into their stops for a retest of that high. That's a very, very easy to see scenario might come in here for us next couple hours here on the Nasdaq. The second scenario you definitely want to watch for here is a range. It certainly is, right? And again, it wouldn't make a lot of sense other than the fact we had all this movement, and anytime I see this much movement without really any pullback, right, we know there's a good chance that nobody will want to sell it, but at the same time, nobody feels comfortable buying it any longer. Now, again, we don't really know where that range is yet, but once we do know where the range is, we'll use that to find our buy zone. We'll wait for the bullets to run out. We'll wait for that pullback, and again, look for that seller failure below the low to buy back up. So basic strategy here. Seller failure pattern underneath that trading range. And, real quickly here, I also want to remind you too, tomorrow we're going to use a set of rules to qualify all of these patterns, right? I'm not going over that right now because the video is long enough as it is. But as a client of mine, I'm going to give you a copy of my checklist. This is a simple spreadsheet that we follow with all the rules to check off to qualify each trade. And again, tomorrow, we'll do that together. If you're not with me tomorrow, though, right, I cover a lot of those rules, not to mention all my favorite patterns in that free course, which again is linked up in the upper right-hand corner, right? And again, all the links I'm talking about are in the description of this YouTube video. So if we do go into a range, we're looking for that seller failure pattern. We talk a lot about those failure patterns in that free trading course, so make sure you grab that right before the end of the day today. And then pullbacks, right? Pullbacks. Do we get a shallow pullback? Right down into, you'll notice what I've kind of lined to these highs. I brought it down to find this hidden channel. I purposely didn't use the most obvious hidden channel because I want to find something worth buying, right? I could have easily put this channel up like this, but it's not going to accomplish my objective. My objective is not to buy high. My objective is to buy low. I'm expecting, again, one or the other. We'll either rocket higher, right, or we'll pull back, right? So I'm anticipating I'd like to find a way to buy low where I can risk small to earn large. So I've taken these highs, I brought it down to that low, and this just looks like a really good spot where I can combine that reversal line at 95 3/4. That looks to be a really healthy pullback. It's not too deep. It's not too shallow, right? So we know that if I do get that pullback, right, the easiest pattern, the easiest strategy is going to be, right, we haven't seen really anything. So I'm sure once we get that pullback, you'll see some short sellers trying to get short off the moving average. Once they commit, now we know where their stops are. We can buy into those stop losses and then into a pullback pattern. Haven't talked about this a lot in the video tonight, right? I want to try to keep the video light for you guys. We talk about these quite a bit, so I try not to sound like a broken record, but we do apply the same basic patterns pretty much every day that we trade. Again, once we get a nice deep pullback, not too deep, right, but relatively deep, down into my buy zone here, I'm waiting for those bears to get caught on the wrong side, buying into those stops, and then almost all the time we'll get that push up, that pull back, and right, if you get a big account, you can add to your position. If you have a small account, you can go 1-to-1, take your first target, and then do it again. Right? If you're in a one contract position, that's what I would do if I was on one contract. I'd go 1-to-1 for the first target and then try to add it again, right? Take a quick target, right? Stop moves up and then add it again on the pullback, right? Also, don't forget, if we get that much deeper pullback, right? Now this one, again, you never know when the bottom will pull out of this. This is that prior all-time high, right? That 92.5 area, right? What was resistance can be used as support. So 92.5 is where that level comes from. If you're curious, right, where that level comes from, that's a really attractive area, but it's a pretty hefty pullback, right? So as we pull back on this, obviously a seller failure off the shallow pullback. But if we do get that deep pullback, right, down into that secondary battle zone, down into that major level of support, again, this is great because I can risk small to earn large. The problem, though, is that deep pullback comes at a price, right? So now I got to wait for the bears to try once, wait to try twice, and then I can buy from there. And again, remember that nested failure, we call it, right? 1 try for the bears, 2 try for the bears. The price we pay for a deep pullback is momentum. Let them try once, let them try twice, then we can buy into those stops. These deep pullbacks almost always just rip higher once those bears fail. And so once we see that market just racing higher, shallow pullback, higher high, trap low, it's basically a nested failure into a 2-try trap pattern, right? A great combination. I'm always trying to make sure I anticipate, if I get this, then look for that. If I don't get this, then look for the other thing, right? You're always trying to give those if-then statements so you're always ready to go. And we'll do this again tomorrow in the trade room at 8 o'clock Eastern time. And again, make sure you grab that free course I keep mentioning. We'll talk a lot about those nested patterns, when to use them, when not to worry about them, when to stay patient, and when to get aggressive. So now we know more about those deep pullbacks. How would we reverse? How would I sell this market? You know, the only way to sell high right now would be a crown reversal, right? That would be, of course, we pull back 1 and 2, trap high and go. But, you know, again, that's a pretty, dare I say, ballsy short, right? It's a pretty gutsy trade short, pardon the term before. Pretty gutsy trade short there because you're obviously going well against this momentum. I would much rather have us deep pullback, right? Pull back to the EMA, right? And jump off that moving average. Once you get that pullback to the moving, again, I'm not trying to predict the reversal, but once I see that reversal finished up, now I've got to get aggressive, right? Selling off of that high. I would imagine that gap at 36 3/4 be a pretty easy magnet for us if these bulls fall apart. And remember, last Friday was a big down day. Monday and Tuesday were short covering rally days. Tomorrow could be the seesaw right back down again. It could easily happen. It seems unlikely right now, but a lot of this big rally was just came out of Asia because, right, China was talking about the fact that they're not backing off their phase 1 trade deal promises, right? They've got it contained. We heard a lot of bullish remarks out of China. If they come out overnight and say, sorry, we messed up, it's worse than we thought, or even not even that much, could spook these markets and we could see that collapse back down. So don't rule that out, but definitely don't try to predict it, right? This market can stay stuck at these highs a lot longer than I can afford to leave that margin open on my short position. All right, we're looking good here on the Nasdaq. We know how to trade it as it goes higher. We know not to get wrapped up if it goes sideways, and we know the 2 types of pullbacks we're waiting for here. How about some gold? How about some yellow metal here to wrap things up here for tonight? Always love the gold market. What do we know about gold right now? We know we're bearish. That's pretty easy to see there, I think. What else do we know? We also know that we are 1, 2, and almost 3 legs down, right? That's a very big level of support. And guys, remind me, whenever we go 3, 4 legs down, what do we start looking for? Ranges, because trends don't last forever. I know they feel like they will, but trends don't last forever. So remember, if you're getting in early in the trend, right, the first 2 legs, get aggressive. right? But later on in that trend, when you're 3.5 legs down, 4 legs down, right? Now's not the time to be trying to get aggressive. Now's the time to wait for that profit taking, wait for those counter trend traders, right? And hit them where it counts, right? Gives you a great chance to sell high rather than trying to, to fiddle around with a couple ticks here and there, right? You'll get all chopped up trying to sell low, right? Sell high. A lot of this has to do with awareness of where you are in that trend. A lot of what we do in our trade room every morning is, okay, we know we're bearish, but where are we in this trend? How do you know when to stop buying pullbacks? How do you know when to stop selling the retracements? How do you know when the market's gone too far? Well, usually measured moves in trending markets, 1, 2, 3 legs, you got to expect a range. Now, given there will always be an exception to that rule, sometimes there's a virus breakout, sometimes it's a political announcement, sometimes it's an act of terrorism and the market freaks out, it goes 4 or 5 legs in one session, but that's relatively rare. And when we see those examples, when we see those sensational moves in the markets, we get aggressive with it. But in most times, though, 1, 2, 3 legs into a range, so I'm definitely anticipating a range here on the gold. Now, I know we're bearish, and I know I want to sell at resistance. I've got this weird channel drawn on here, right? You might be asking right now, what is this guy up to with this channel? Now, you don't need me to tell you there's a channel right here, right? There's a channel right there. There's obviously a channel right there, but that channel right there is a waste of time. Why? Because it doesn't help me risk small to earn large. Okay, this is one of the big beefs that I have with typical technical analysis. You read in most trading books, they talk about drawing channels, and they make it sound like channels are like, the best thing since sliced bread. And they are, right? And every once in a while, you get a great long-lasting channel, but usually what happens is, by the time you see that channel, those perfect, you know what I mean? Those perfect channels you see in day trading for dummies, right? Those perfect channels, well, like anything else in life, the stuff you read in textbooks barely applies, right? Rarely applies to the real world. I don't want to sell low, and that's what these narrow channels require me to do. I want to sell high, right? Now, this is a little bit of a stretch, but I'm lining up these lows. I'm bringing it up to these highs. Now, why did I choose that high? I chose that high because the midline, right? That midline seems to fit pretty well. That also puts me right into, you'll notice, right? The high of that channel, it also puts me here. If I draw this range, if this range is correct, and what I think it is, I can take the size of that range, right? And I can use that to find my sell zone overhead. I've also got this level, right? This is the prior low. This is just like the Nasdaq, right? The Nasdaq uses that prior high. I'm using that prior low as a level of resistance as well. So all of that kind of lines up in the same location, right? Trend line comes down, resistance here, resistance there, resistance there. So now we have a pretty good idea, right, for where I want to be looking for a short. It lines up great with the range. It lines up great with that, again, kind of a hidden channel, right, as I call it, or a negative channel, right, as we go. Now, we also know, right, that anytime we see a big move down for the bears like this, you've always got to think, if these bears can't hold this, right, short covering rally, okay, that's also one thing I want to be aware of for tomorrow as well. When I see a big down day, I know that tomorrow, if these bears can't hold these highs, what's going to happen? They'll fail, and it will whoop right back up to retest those highs again, right? That short covering rally needs to be in my plan for tomorrow as well. It's exactly what happened on the E-minis at the beginning of this week, right? That same aggressive type move could easily happen on the gold, right? So we definitely want to keep our eyes open for that short covering rally. Okay, how do we sell this market right now? How do we sell it? The easy short is really going to be based on what type of pullback that we get. So think about it this way. I've got my, kind of my shallow pullback here, right? My deeper pullback above it. So if I can get up above this high, if I can get a nice pullback going higher here, up around the high of that channel, I can look for a nice, easy, right, buyer failure into a seller pullback combination. Now, we might not get the pullback pattern, right? But the failure pattern should be pretty good to go, right? The pullback may not happen, right? We don't always get the pullback pattern. Sometimes we do, sometimes we don't. So we'll keep our eyes open for it. A failure into pullback combination. Now, keep in mind, if it really jumps right up into this area over here, again, we still want to consider being a seller, but now that momentum comes in, right? Now it's one swing, two swings, right? and then we can sell it down from there, right? That's going to be I would think that's probably going to be the most difficult part of this if you're not with me tomorrow in the trade room, is gauging the momentum as it pulls back, right? Momentum will not build very much for a buyer failure at the high of that channel, but if it really gets above that high, up into that sell zone overhead though, now I think those buyers, they're going to put up a fight, right? Want to let them try once, let them try twice, and then we can sell back down from there. It's a difference between a regular failure pattern and a nested failure pattern. And again, as I mentioned repeatedly here, we go over all the details of that inside that free course linked up in the upper right hand corner. Now, how else can we sell this? If we go sideways here, and again, we're kind of waiting for confirmation on this. If we go sideways, wait for those bears to run out of bullets. Wait for that profit-taking rally, right? We want to get up inside, or at least hit that 64.3 area. Get those buyers to come in, right? Trying to buy that pullback, and we'll look to sell right into those stop losses again. So not a lot is different there. Now, what we may also see here is we got that major low, right? That major low here, 42.8. This is a major low. Right now, on a bigger time frame, gold looks like this. Okay, so gold right now looks like this on a bigger time frame, and that 42, that major low is right there. So it's very easy to see how this could easily be a big time turning point for gold, right? That 42.8 level is that level I was just talking about, a slower time frame. So if we keep running lower here, right? If we keep running lower, what's the plan? The plan doesn't change. We want to get up, get a buyer failure, and sell it back down, right? Get above the moving average, get up into some of these levels of resistance, right? Trap highs above those highs, get short off resistance using those buyer pullback failure setups, and sell it back down to retest that major low. If we open up here, well, we're open right now, but if it runs lower, real strong push lower, right? Strong move down, shallow pullback, lower low, trap high. Right? Two-try trap pattern. Be very careful trying to get too aggressive down there. It's a major low. I would anticipate a lot of bears had their targets there, and it could easily reverse off of that low, right? We might see this thing run lower and then literally bounce into a 1, 2, 3 reversal, and we're off to the races here to the upside, right? Buying that next pullback off the low of that hidden channel, right? That could easily happen before we even come back to work tomorrow morning for the trade room. Right, so that could easily happen. That bounce off it, 1, 2, 3 reversal, and then of course you're buying the pullback right off that hidden channel low. Okay, those are some options here to be a seller. How can I buy this market right now? There's a couple options to be a buyer, right? I'm not opposed to being a buyer because we're sitting right down around these major lows right now. And if you're going to take a gamble on a reversal like that, you better do it at a major area of support. So we know we've got support down here. The measured move is down there, right? This whole area here. So if I can get a nice run lower, and then this is where you got to pay attention, because now, right, the bears, the sellers will try once. Okay, now we're not making lower lows here now. We're making a higher low and then a trap low, right? What do we call that? A crown reversal, right? And again, you do want to be patient for that trap low, because that's where the sellers are not going to be selling, right? That's your edge right there. That's your ability to sneak that order in and then whoop right back up, right, to retest the highs of that trading range. Another option would be to be a buyer would be obviously a 1, 2, 3 reversal. Right, strong move up, the buyers hold the pullback, we're marking up that high now, we're finding that hidden channel, and we're simply buying the pullback off the low of that hidden channel. Or things could get crazy, right? Who knows what could happen overnight, right? Strong move up, rips higher here, shallow pullback, higher high, trap. Now, you don't need the trap, but you know me, I like to trap, right? Traps are always my favorite, right? If this thing really rips though, 1 try, 2 try, that'd be the aggressive one without traps. Right? Because again, what you're doing is you're going to be buying relatively high there. So again, it's going to be a very, very strong move higher there. Bears try once, bears try twice. You're literally buying right into those stop losses on those kind of runaway, type of markets there. And again, that could easily happen tomorrow with that big move down today. If these bulls get excited, right, they'll make that run right back up to retest all of those highs. So now I get a pretty good plan here, right? I can look for that crown reversal off the low. I can look for that 1, 2, 3 into a hidden channel pullback, right? Or again, if we really get going crazy here, right? 1 try, 2 try, right? 2 try, breakout pattern, 2 try, reversal pattern. If we really get lucky, we'll get that 2 try trap, right? And buying off that trap. And again, usually that trap pattern be just off that, right? Off that hidden channel, right? That's always where the most reliable little traps come, right? Just below the moving average, just off the low of that hidden channel. And again, I'm just simply drawing things up here right now. I'm visualizing what I want to trade for tomorrow. Tomorrow morning, we'll be in our trade room like we always are, 8 o'clock Eastern time, like clockwork. I want to see you there, right there with me. It's been great to have you with me on the newsletter, but now it's time to go apply this stuff correctly. Our advanced course is an all-inclusive membership. It comes with video classes, all the indicators, the cheat sheets, the checklists, and of course, daily access, right, to one of the premier trade rooms on the planet. Been doing this every morning at 8 o'clock Eastern time since 2008. Do the math, one of the longest running trade rooms on the planet. I'll put all the links, by the way, in the description of the YouTube video, right? So dig into the description of the YouTube video, grab that link to get registered for tomorrow. Don't be afraid, right? Don't be afraid to call me in the office if you have any questions tonight. Use that live support, or as always, drop those questions right below the video tonight in the comment section below. And don't forget to subscribe, right? No excuse. I don't want you to miss the next video. We're coming back tomorrow. If I don't see you guys tomorrow morning at 8 o'clock Eastern time, make sure you come back and see us again tomorrow night on the next edition of our nightly newsletter. As always, my name is Joseph. Great job today. Another big day coming tomorrow. Now get out of here. Be well out there. Be nice to each other, will ya? And be here next time, guys and gals. Adios, amigos. Bye-bye for now.